This is Good Morning Mumbai with Hrishi K.
Brand new day, brand new week with our regular finance expert, Saurabh Mittal. Here he is. Hi, hope your weekend was good and all your friends and family and colleagues and extended family are doing fine in this COVID-19 crisis.
Yeah, it doesn't feel like a weekend anymore, but thanks to God, everyone is well, and hope the same for you and all our listeners.
So far, so good, Saurabh. Thanks for asking. Now, the EPFo, which is the Employees Provident Fund Organization, has adopted a simple new process, and you reckon that's going to help speed up our PF claim settlements. Please explain, Saurabh.
Yeah, as simple as it might sound, just let me give you a background to what they've done. So EPFo has been working towards speeding up claim settlements or withdrawal process amid the lockdown so that, people do get cash relief as and when they need, because most of them are cash strapped. Now, in a move in the same direction, EPFo has now allowed employers to send the one-time registration of digital signatures or Aadhaar-based e-sign to the regional EPFo office on email. So the earlier employers were required to send this one-time registration request physically to their regional EPFo office. So this is a one-time registration which is required by employers for their digital signatures. Now it can be done completely online via email. So due to the lockdown, many employers are facing difficulties in sending the one-time registration request physically to the regional office as couriers and postal services are not working. So just let me give you a background. The DSC or the e-sign of the employer are needed for performing many important tasks such as KYC attestation for the employees, transfer claim attestation, etc. by the employers or the person authorized by employer using the digital signature. So without a digital signature, the employers cannot approve or attest to any of the online requests of the employee. So it's a great relief that EPFo has now recognized and acknowledged that the DAC tokens or the e-sign, which is Aadhaar link, can only be sent by email, and it is an online process completely, which will eventually result in faster processing of the claims.
That's nice. What's your recommendation?
Recommendation very simple. It's just summing up the whole thing with the circular enabling employers to obtain email confirmation for DAC and online signature is a welcome move. The objective is to facilitate employers to go ahead with the important tasks, which they mentioned is about KYC or claim attestation. These attestations are to be done online by authorized person of the employers on EPFo portal, for which one-time approval is now being facilitated through emails rather than a physical method, which would ultimately help the timely processing of the employee claim.
Wonderful. What's your quote for the day?
It's a very motivating quote from Fred Rogers. He said, often you think you are at the end of something, you are at the beginning of something else.
Very, very inspiring. We all need that at this time of lockdown. Saurabh, thanks for your...
This is Good Morning Mumbai with Hrishi K.
Tuesday edition of Talking Finance with my finance expert Saurabh Mittal. Saurabh, I hope your friends, family, extended family and colleagues are fine during this COVID-19 crisis.
All well, Rishi, thank God, and wishing the same for you and all our listeners.
Thanks very much. Saurabh, there's a direct tax Vivad Se Vishwas scheme 2020 for settling tax disputes. I'd like you to handhold us through that, please.
Right. So, as the name suggests, it is a new scheme which is launched in 2020. So, it also has an acronym to it. It's called DTVSV, which is Direct Tax Vivad Se Vishwas scheme. Is to reduce litigation related to direct tax matters and provide an opportunity to willing taxpayers to settle their outstanding tax disputes under very favorable terms without the payment of any interest or penalty. So let me just get more dope into it, how it works. So one of the objectives of the scheme is to generate additional tax revenue in the current unfavorable economic conditions. This bill was passed in March 2020 and originally envisaged payments of tax dues under the scheme on or before 31st of March 2020. The scheme is now applicable till 31st of December 2020, but those who availed the scheme after 31st March 2020 were originally required to pay a 10% additional tax on whatever the liability was. But now, owing to the COVID pandemic, the additional 10% tax payment requirement has been waived off, and the taxpayers can avail the scheme up to 30th June 2020 without any additional liability. So all the pending appeals in the nature of whether it is a disputed tax or interest or penalty, it may be a dispute regarding fees or TDS or TCS, which is pending before Commissioner of Appeals, Income Tax Appellate Tribunal, High Court and Supreme Court as on 31st January 2020 are eligible under this scheme.
Saurabh, what's your recommendation under the given circumstances, please?
So our listeners should note that there are few eligibility condition criteria that they should discuss with their chartered accountant. This is a favorable scheme for those of us who haven't deposited the outstanding tax or are going through a dispute related to income tax with the government.
That's nice. So what's your quotable quote for the day?
So it's a quote from Herman Bock. His income tax returns are the most imaginative fictions written today.
Buddy, if we want to reach out to you, get some financial advice, get some investments going, where can we reach out?
So you can put a mail to me. My email address is saurabh@cwa.co.in. Also, I'm on Twitter. My Twitter handle is Saurabh S. Mittal.
Saurabh, speak to you tomorrow. Bye-bye.
Bye. See you.
This is Good Morning Mumbai with Hrishi K.
Wednesday edition of Talking Finance with my finance expert Saurabh Mittal. Here he is on the phone line. Good morning, Saurabh. I hope friends, family, extended family and colleagues are all right during this COVID-19 crisis.
All well, Rishi. Thank you so much.
Saurabh, I've always been curious about the term HUF, the Hindu Undivided Family. This is an opportune moment for you to describe what that is, please.
So, HUF is a distinct legal entity and consists of individuals who have lineally descended from a common ancestor, including their wives and children. So, let us see how HUF is formed and what are the various tax benefits that why should one go for creating an HUF. So let me first give you how it is created and who are the members of it. So HUF consists of a karta, usually who is the senior most member of the family. Then there are co-partners. These will be all the members of the family, including daughters, which were given the right to be a part as a co-partner from 9th of September 2005 when the Hindu Succession Act Amendment Act 2005 came into operation. And thirdly, there are just purely members, which are females coming into the family after marriage and adopted children. So the Honorable Delhi High Court ruled in the favor of women being a karta of HUF in January of 2016. So even women can now be a karta of an HUF. Now, members of an HUF are not entitled to ask for partition. This right is only reserved for karta or co-partners, but they are entitled to maintain and have a proportionate share in the joint assets as and when the partition takes place. You can form an HUF if you are a Hindu, Sikh, Jain or a Buddhist. Although as the name suggests, the joint family as the essence of HUF entity, it can be formed by a married couple in a nuclear family unit. So HUF can be formed by two individuals, at least one of whom should be a male member of the family. And since HUF is taxed separately from its members, it can be used to reduce your tax outflow very efficiently.
That's very well explained, Saurabh. Could you give us your recommendation, please?
Yes, since an HUF is a separate entity for taxation purpose and is taxed at the same rate as individuals, it enjoys all the available deductions and exemptions that can be used to offset the tax payments on the income. We'll discuss more about it in details tomorrow. So what we recommend is that it can be used to reduce tax outgo through the division of income between multiple accessible units.
That's fine. Saurabh, your quotable quote for the day would be?
So since we are talking about families and HUF, a quote from someone anonymous says, families are like fudge, mostly sweet with a few nuts.
If you want to invest, where can we reach out to you? Even if you want some financial tips, the best way to get in touch.
So you can put a mail to me. My email address is saurabh@cwa.co.in, and you can also get in touch with me on Twitter. My Twitter handle is Saurabh S. Mittal.
Thanks for your time. Let's speak tomorrow. Bye-bye.
Sure.
This is Good Morning Mumbai with Hrishi K.
Thursday edition of Talking Finance with Saurabh Mittal. My finance expert returns on the phone, maintaining social distancing. Good morning, Saurabh. I hope friends, family, extended family are fine in this COVID-19 crisis.
All well, Rishi. Thanks to God, and wishing the same for you and all our listeners.
Thanks very much. Yesterday, you explained in great detail what an HUF is, a Hindu Undivided Family. The logical progression to that is, what are various tax benefits under the Hindu Undivided Family, the HUF? Please take us through that today.
So, like I mentioned today, HUF becomes a separate accessible unit. You get a separate PAN card for it, and it enjoys all the tax benefit like an individual employee. So I'm just going to lay down all these benefits which are available to HUF. To start with, an income of up to rupees 2,50,000 earned by an HUF is tax-free, which is as per the current tax slab for the assessment year 2021. Also, like an individual, an HUF can be used to carry out any business separate from its individual members, and thus can be used to offset the tax liability which would have arisen in the case of a single joint business. Similarly, like individual deductions under Section 80C can be claimed by HUF. So, for example, a HUF can take insurance policy in the name of the members and make payments of the insurance premium, which can be claimed under Section 80C. And like insurance, other benefits are available in other investment opportunities like PPF or ELSS. Also, under Section 80D, a HUF can claim a tax deduction under health insurance premium, which is paid for the health insurance policy taken in the name of the members. Also, one more interesting is that an HUF can pay salary to its members for contributing to the functioning of the HUF, which can be claimed as a deductible non-deductible expense for its income. However, there must be some justifiable contribution to the salary earning member to the working of the HUF and management of its affairs. Again, if a member of the HUF receives HRA from his or her employer and resides in the property owned by the HUF, then he or she can pay the rent to the HUF and subsequently can claim the reduction on the HRA received by his employer. Since the income after the tax of HUA is the family's income, the Karta can use it for family's expense and can also distribute it amongst members without any further tax liability because the tax has been paid at the HUF level. Lastly, the HUF can also be a non-resident if the management and control of the HUF is done from outside of India.
So, Saurabh, what is your recommendation under the given circumstances?
So, I have spoken about all the advantages of forming an HUF, and mainly it is tax benefits, but there are also some disadvantages to it. Firstly, like I said, that there is a separate accessible unit and the PAN card is issued in the name of HUF, so it requires heavy maintenance and filing of income tax return on a yearly basis. Also, the assets which are held in HUF, when the partition helps, the dissolving of HUF and the partition of assets can be a tricky part. All the assets which are held in the name of HUF gets divided automatically amongst all the family members, so much to the extent that the members of the HUF, including the unborn child in the womb of the mother, also becomes the owner of the property. So weigh your pros and cons before forming an HUF, consult with your chartered accountant and see only if the advantages are more than the disadvantage for you to form an HUF.
Wow. Waiting to hear your quotable quote for the day, Saurabh.
So it's a quote from Guy Lafleur. It says, when trouble comes, it's your family that supports you.
Yeah, there's no business like family business. I completely agree with you. Saurabh, before you go, in case we want to invest or we want some financial tips from you, where can we reach out?
You can put a mail to me. My email address is saurabh@cwa.co.in. Also, I'm on Twitter. My Twitter handle is Saurabh S. Mittal.
Let's speak one last time this week tomorrow. Bye-bye.
Sure, bye.
This is Good Morning Mumbai with Hrishi K.
Friday edition of Talking Finance with Saurabh Mittal. Here he is, maintaining self-isolation and talking to me on the phone. Good morning. I hope your friends, your family, your colleagues and extended family are fine during this crisis, Saurabh.
All well, Rishi. Thanks to God, and hoping and wishing the same for you and all our listeners.
So far, so good, my friend. Cost Inflation Index, the CII or Cost Inflation Index. It's something that we often hear. Today, I'd request you to explain what that is.
Yeah, so just let me give you a practical use of it. And imagine if you bought a house worth 5 crores in 2015 and you're selling it for 7 crores in 2018. What will be the capital gain here? It looks like it is 2 crores. And imagine how much tax you might have to pay for it. It will be a really big chunk of a profit to be paid in tax. To save you from heavy tax payment, government has always been related to CII. It is used for calculating the estimated increase in the price of goods and assets year by year due to inflation. So with the help of CII, the cost of purchase of an asset will be indexed, and in other words, it will be revalued or increased from its original price, considering the effect of inflation, and that will result in lowering the capital gain tax payable on the sale of the asset.
That's explained very lucidly, but the logical question is, why is CII used in income tax?
Yeah, so basically CII is used for capital gain assets like real estate, gold, debt, mutual funds or debentures. These are basically assets or asset class whose price will increase by a period of time as the value of money gets eroded due to inflation. However, we record capital assets at the cost price despite increasing inflation. They exist at the cost price and cannot be revalued year after year. Therefore, when the assets are sold, the profit amount remains high due to the higher sale price and as compared to the purchase price. This leads to higher tax to be paid on capital gains arising on their sale. So in the example which I just mentioned, you all know that the value of 5 crore at the time of 2015 cannot be equal to the value in the year of 2018. It will increase because of inflation. The house purchased in 5 crores will cost much higher today, and the reason is inflation. And therefore, the cost inflation index is calculated to match the prices to the inflated rate which would be existing today. So in simple words, an increase in the inflation rate over a period of time will lead to an increase in the price of the capital asset and eventually result in lesser capital gains and tax. You only pay tax on the actual gains and not on the inflated gains.
What's your recommendation, my friend?
The cost inflation index can be used for calculating long-term capital gains for investment in securities and real estate. Just a small deviation is that LTCG, which is long-term capital gain, is flat 10% for investments in equities, and indexation benefit has no relevance for calculating LTCG for investments in shares and equity mutual funds. But it is useful to calculate LTCG on debt-oriented mutual funds like bond funds and fixed maturity plans.
Okay. What is your sign-off quote?
So it's a very great quote from Albert Einstein. He says, "This filling of tax is too difficult for a mathematician. It takes a philosopher."
Well, if Einstein was struggling, we all are. Saurabh, before you go, where can we reach out to you if we want to invest or we want some financial tips?
So you can put a mail to me. My email address is saurabh@cwa.co.in. Also, I'm on Twitter. My Twitter handle is Saurabh S. Mittal.
Have a good weekend. Let's speak on Monday. Bye-bye.
Sure, bye.
This is Good Morning Mumbai with Hrishi K.
Brand new day, brand new week with Saurabh Mittal, my excellent finance expert. Here he is on the telephone line. Good morning, Saurabh. I hope friends, family, colleagues, extended family are fine.
All well, Rishi. Thanks, and hoping the same for you and all our listeners.
So far, so good. I've often heard about the 3 sides of risk by Morgan Housel, and I made a mental note saying I've got to ask you. First, tell us who Morgan Housel is, and secondly, what his 3 sides of risk are.
So Morgan Housel is one of the smartest investors, and he has a great nudge or edge on small cap investing. In one of his latest blog, which was published last week, he spoke about 3 sides of risk, and he talks about the specific type of risk that deeply impacts us and alters all our behavior as a person. So let me just start telling you about myself, and so that we can relate to what he's trying to say. So in 2016, I met with an accident. I was into biking, and it was rainy season, and I took my bike to Karjat on a ride. And while coming back, I actually met with an accident. Auto guy bumped into me, and as a result, I fractured my right arm, and I was operated, and an implant was put into me. So this actually I could relate to when I read this blog, and he said that there are 3 distinct sides of risk. One is the odd you will get hit. So what were the odds that I'll actually get hit? What are the average consequences of getting hit? And most importantly, the tail end consequences of getting hit. So the first 2 things are easy to grasp. It's the third that's hardest to learn and can often only be learned through experience. So I knew I was taking risk when I drove in rain. I was biking in rain. I knew that this is unwarranted, and riding without a group specifically was the wrong thing to do. And I might get scared. But at that point in time, I figured the consequence of risk meant a few bruises or maybe some repair work on my bullet. Never, not even once did I think that I would pay the price of being bedridden for a few weeks, get multiple operations, and will have a health impact and a weak arm. And if you think about it, same is the case when people drive without wearing a seatbelt or talk on phones while driving. But once you go through something like that, you realize that the tail end consequence, the low probability, high impact events are all that matters. So let me tell you why I'm talking about this. In investing, the average consequences of risk make up most of the daily news headlines, but the tail end consequences of risk like pandemics and depression are what makes the pages of history. That's all that matter, So there you should focus on, that's what you should focus on. We spent the last decade debating whether the economic risk meant the RBI reduced interest rates by 0.25% or 0.5%, and then suddenly that millions of people have lost their jobs in 2 months because of a virus. It's sounds to be absurd, but tail-end events are all that matters, and once you experience it, you will never think about it in an otherwise manner.
Wow, that is really a fascinating tale. I'm really sorry to hear about your personal accident and also how you've interpreted it. What is your recommendation, Saurabh?
So, like we said, certain events alter the way we live, think, and even breathe. They either make us aggressive or defensive. It's important for every investor to stay true to themselves. If they are defensive, then making aggressive bets in a bullish market will give them sleepless nights if something goes otherwise. We should remember that our money will work best for us when it is aligned with our life and our risk patterns.
Very beautifully put. What is your quotable quote for the day, Saurabh?
It's a quote from General George Patton. He says, "Take calculated risk." That is quite different from being rash.
Very well said by the good general. Thanks very much for your time, your patience, your energy. I look forward to speaking to you tomorrow morning, my friend. Bye-bye.
Sure, bye. Thank you.
This is Good Morning Mumbai with Hrishi K.
Tuesday edition of Talking Finance with Saurabh Mittal, my finance expert. Here he is back on the telephone line, maintaining social distancing. Saurabh, I hope friends, family, extended family and colleagues are all right during this COVID-19 crisis.
All well, Rishi. Thank you, and hoping and wishing the same for you and all our listeners.
Thanks very much. Instant PAN card applications. A lot of people are gung-ho about this, but there is an eligibility criteria. Saurabh, I'd like you to talk about that today.
Yeah, so, for most of us, they would have already applied for a PAN. They would be having a PAN number, but this is particularly for people who have an Aadhaar but didn't have a PAN as yet. So there is a new scheme which is started which allows you to download your e-PAN, and it is free of cost and it is done instantly. But there are a few eligibility regarding that. First of all those who have been allotted a PAN card before cannot use this facility to apply for an e-PAN, because then it would eventually lead to allotment of 2 PAN numbers, and there is a legal consequence of it. If you have 2 PAN cards, you may be asked to shell out a penalty of rupees 10,000 under the income tax NPS Act. So you have to be very careful that you're not applying for a new PAN card. Also, having a valid Aadhaar card is perquisite for applying for EPAN, which fetches the data from UIDAI to all your identity essentials. During the application process, you do not need to fill any form nor submit any document because all the data will be collected from there. But having an Aadhaar card is not enough because you also have to ensure that your mobile number is registered with your Aadhaar, which is your 12-number identity, and the income tax department sends an OTP on the linked mobile number, which would eventually fetch the KYC process and get the data. Also, this facility for instant EPAN is available only for those above the age of 18 years. If you are a minor on the application date, you are ineligible to apply, and the facility is available only to individuals and not for companies or HUFs, which is basically non-individual.
Saurabh, what's your recommendation? That's very well explained, but let's sign off for that.
Yeah, so with the launch of instant EPAN card facility, getting a new PAN card is not only easy and paperless, but also now, as I said, it is completely free of cost. As the income tax department has made EPAN card equivalent to the old laminated PAN card, having a PDF copy of the 10-digit alphanumeric card is as good as the physical copy. Also, if you have already applied, if you already have a PAN number which you had earlier applied to UTI, you can go on the UTI website and apply for a EPAN, where you can download the EPAN in a PDF format by paying just a cost of 8.26.
That's wonderful. What's your quotable quote for the day?
So it's a great quote from Arthur Clarke. It says, the best measure of a man's honesty isn't his income tax returns. It is the zero adjustment on his bathroom scale.
Can we have your coordinates, please? If people want to invest or people want to take your advice in financial matters, where can they reach out?
So you can put a mail to me. My email address is saurabh@cwa.co.in. Also, I'm available on Twitter. My Twitter handle is Saurabh S. Mittal.
Wonderful. We'll speak tomorrow. Bye-bye.
See you. Bye.
94.3. This is Good Morning Mumbai with Hrishi K.
Wednesday edition of Talking Finance with Saurabh Mittal. My astute financial advisor is on the telephone line. What's up, Saurabh? I pray your friends, family and colleagues are all right.
All well, Rishi. Thank you so much.
Saurabh, much has been said about the EMI moratorium extension, but let's just take into account the three top banks in this country, which is ICICI, HDFC and State Bank of India. What do we need to know as far as EMI moratorium extension is concerned with these three banks? Let's start with ICICI, please.
So you said EMI moratorium has already crossed this first stage where people would have applied for a moratorium for the first 3 months. Now in the month of May, government has extended this moratorium for the month of June, July and August as well. So let me talk about ICICI Bank. ICICI Bank customers can apply for the moratorium for June only right now. So if you want to extend it further, you will have to reapply for July and August. You need to apply for 5 days before the date on which your EMI is due. So basically you have to make sure that before the 5 days of due date, you apply for a moratorium. If you apply within less than 5 days, your EMI may be deducted, but there's a relief to it. You will be refunded the amount in the next 7 working days if you apply for the moratorium in that particular month as well. The last date for applying for the moratorium for June is 24th, and you can apply for the extension on bank's website or through links sent on email or SMS to you by the bank.
That's very well described. So let's move on to HDFC now. In the case of HDFC Bank, what can we expect?
So even in the case of HDFC Bank, those who have opted for moratorium earlier will not get moratorium automatically and will have to reapply for the extension on the bank's website. You can choose for the moratorium for 3 months, while the customers have been given the option to choose 1 month at a time also. No action is required on the part of those who don't want to apply for moratorium, obviously. But if the bank deducts the EMI before the person applies for moratorium for the month of June, it will be refunded like in the case of ICICI within the 5 working days of acceptance of the moratorium request.
And finally, let's come to SBI, the State Bank of India. Their terms.
So SBI has seemingly a very simplified process. Basically, they will send an SMS to all the customers who are eligible for moratorium, and SBI customers will receive an SMS from the bank on the registered mobile number, and they will have to reply with the simple yes or no within the 5 days of receipt of that SMS.
Yeah, that's a simple enough process. Let's have your expert recommendation under the given circumstances, Saurabh.
Yeah, I mean, moratorium is a great help, but borrowers should remember that opting for moratorium doesn't ease the cost of loan and is just a deferment of the EMI that you were to pay in these months. We at Circle Wealth Advisors have maintained that the moratorium should only be taken when the emergency fund is already exhausted. While calculating the emergency fund, which is 6 months of expenses, we do take EMIs into consideration. So if you have absolutely exhausted your liquidity, then does it make sense to go for a moratorium?
Makes sense. What's the quotable quote for the day?
It's a great Spanish proverb. It says, debts are like children. The smaller they are, the more noise they make.
Absolutely correct. Saurabh, please, your coordinates if we want financial advice or we want investments.
So you can put a mail to me. My email address is saurabh@cwa.co.in. Also, I'm on Twitter. My Twitter handle is Saurabh S. Mittal.
Let's speak tomorrow. Bye-bye.
See you.
94.3. This is Good Morning Mumbai with Hrishi K.
Friday edition of Talking Finance with the one and only Saurabh Mittal. His astute observation and understanding of micro as well as macroeconomics really makes our day. Here he is on the phone. Good morning. I hope friends, family, extended family and colleagues are all right in this COVID-19 crisis, Saurabh.
Good morning, Hrishi. All well, and wishing the same for you and all our listeners.
Thanks very much. People who are below the exemption limit of income tax often turn around and say, there's really no benefit for me if I file my ITR. But you want to today elaborate on the various benefits of filing your income tax returns, even if your income is below the exemption limit.
Yeah, and I'm going to not give you one reason. I'm going to give you 7 reasons, why you should file your income tax returns. So first and foremost, if you're filing your returns, it becomes a proof of accumulated earnings over the year. A person might have income which is lower than the exemption limit, but over the years, when they keep accumulating and buying assets, it might turn out to be a good proof of how those assets were accumulated. So it's a good form and good habit to keep filing your return. Second is that if you're traveling abroad, a lot of countries have return filed as a document of proof before issuing the visa. So for your visa processing, ITR documents comes really in handy. Third is that ITR serves as a proof of income for self-employed. If a person who's on a salaried basis is not filing returns, still they have salary slip to show as their income proof. But for self-employed, there is no other way to show an income proof. So that is where ITR would come in handy. Also, if someone is investing in mutual funds or has any other capital gain, and if in any of the year there is a loss, then if you're filing your returns on time, you can really carry forward those losses. And in future, if there is any taxation liability which is arising, you can offset those losses from current year in those future years. Also, some people feel that if their TDS has been deducted, they don't have any liability to file the returns. In fact, it is counterproductive because you should file your returns, and if at all the liability is low or you are below exemption limit, you can actually claim the refund of those taxes. Also, we all know that if you have returns being filed, it becomes much easier to get loans. And lastly, a lot of insurance companies, when they're coming up with these term products, online term products, they're making it mandatory or are giving a higher cover if you're someone who's filing your returns. So if you have your returns filed, it becomes easier to get a higher life cover.
7 super practical reasons to file your ITRs. What's your recommendation, Saurabh?
So it's natural to feel lazy about filing ITR when your income is below exemption limit. We all have gone through that phase, but there are good reasons for filing them. So our recommendation is to keep on filing your ITR regardless of your income tax limits.
Well said. And the quotable quote for the day would be?
It's a great quote from William Buckley. He says, I would like to electrocute everyone who uses the word fair in connection with income tax policies.
Ouch. Harsh words, but telling words. Lovely. Have yourself a wonderful weekend. Let's speak on Monday. Bye-bye.
Sure. Bye.